Real estate investing has been regarded as a powerful wealth building tool, and in this episode, we will explore the fundamental steps and considerations for those interested in embarking on their real estate investment journey. Whether you're a complete beginner or you've dabbled in real estate over time, we will guide you through understanding the basics, setting investment goals, and taking the crucial first steps toward building your real estate empire. Or, finding out it's not for you. Let's jump in and unlock wealth as we go through the introduction to real estate investing.
Welcome to the Financial Mirror. Where future success is reflected in our knowledge of fixing the one thing we can control, ourselves.
Welcome to the Financial Mirror, and thanks for joining me today as we continue to work on improving the one thing you can control, yourself. Here at the Financial Mirror, it's not about the numbers and spreadsheets alone, but about transforming and educating you on money so you can make smart financial decisions. If this is the first time you're joining in, don't forget to hit subscribe on YouTube to be notified of all the new episodes as they release. If you are listening on a podcast platform of your choice, don't forget to like and subscribe to the podcast. If you're on Apple Podcasts or Spotify, go ahead and leave that 5-star review, and the written comments go a long way in helping spread this information to more and more listeners. So we just came off of a good series about increasing your net worth. Toward the tail end of the series, we talked a little bit about retirement and investing and things like that. And I decided, and I hinted to it a few times, if I recall correctly, about doing a real estate investing series. So this is a little series that I wanted to throw together for people that are interested in real estate. Okay. It is truly becoming one of the most powerful wealth building strategies available. It really is. And it offers individuals the opportunity to generate additional income, achieve financial freedom, and create a legacy for themselves and their families, right? It's really a vital tool. It really is. The problem is that, and what sort of led me to wanting to do this series is that I'm seeing more and more through different avenues. I don't have a TikTok. I've never had a TikTok. I never once even created an account. I have friends that send me things and it's on TikTok, and I open it and it opens in a browser. So I think that's as close as I've gotten to TikTok. But I've heard that there's tons and tons of information going out there. Some of it is leading people astray about real estate and how you should jump into it and all these things. And I was like, I really should do a real estate investing series. So this is a short series. It's not going to be like the Increase Your Net Worth series, but there are tons of strategies out there. The markets are fluctuating. They're not anything like they were, but there's countless success stories out there. And it can be overwhelming, right? It can be overwhelming as you start to think about investing in real estate, because if you're have bought a home in your lifetime, that is stressful. Like there's tons and tons of things that go into buying a home. Now think about doing that as an investment, right? And I want to equate that to if you wanted to invest in the stock market, you go and click a few buttons and you're invested. You want to invest in real estate, you're not clicking a few buttons. You're going to click a few buttons just to find some homes. Then you're going to click a few more buttons to do some market analysis. Then you're going to click a few more buttons to find some agents. Then you're going to click a few more. You see how many buttons we've clicked? So you can see it's not the same as other types of investing. And I wanted to do a quick series just to give you like a lay of the land, teach you about some of the things that you should consider when you're thinking about doing real estate investing, and really try to give you a realistic side to real estate investing. And I say all that to say that we are going to have I'm going to do a interview, maybe two, with people that have done real estate investing. Along this episode, and even in one of the other episodes, I'm going to give you some of my personal stories as well about real estate investing. And I just want you to have true knowledge about what it entails, because the TikTok and the Instagram and the Facebooks or Meta, whatever they call themselves, the YouTubes, the Rumbles, all these platforms, I'm not saying that they're lying, but I'm also not saying that the advice they're giving is the best advice. And you probably could sit there and say, well, how do I know that what you're saying is the best advice? Well, you're right. But if you would go just take a look at, everything I'm going to give you is very, very concrete based, tons of research and education around it. So I tell you just to look into it. I think you should make that educated decision for yourself. But I'm going to share an opposite side of what a lot of people are sharing. So go watch their side, and then you can take mine and run with it. Okay. But no matter what your real estate investment goals are, no matter what your real estate goals are, you're bound to learn something in this episode. Even if you already own, 2 or 3 properties, there's something that you could probably take away, even if it's some type of little knick-knack of knowledge that I may drop, that you may have just make you think about something differently. So bear with us and let's run through the getting started with real estate investing. So the first thing that we need to understand is real estate investing basics. Just getting started. What is the benefits of it? So everyone talks about it, but what's the true benefits? Well, obviously there's tons of tax breaks that you're going to get. There is a obvious diversification option. Now, I'm saying diversification in one sense. I don't want you to think about this as you have to own property, though, to be diversified into real estate. So we'll talk about that in just a second. It does hedge a little bit against inflation, right? Because the price, on average, the price of the home is growing in value. So if inflation is going at 2% and you're getting about 3% equity increase in your home on average out there, possibly more in some areas, you're hedged against inflation in that sense. Hopefully you're making money. Hopefully your house is going up in value. There are houses that don't go up in value. So there's tons of houses that don't go up in value. So that's why we'll get to some of those aspects here in a little bit, but just understand that. A couple of other things that you need to think about is that there are multiple types of real estate that you can invest in. First off, that could be residential real estate, physical properties, or commercial physical properties, right? That's 2 types of physical real estate properties. There's other things called REITs that you can do, which are, real estate investments for easy terms there. There's the different real estate mutual funds and ETFs, and there's private funds out there. Tons and tons of different ways that you can get involved in real estate. There's apps out there or companies out there that you invest into a type, and then there is like a real estate building type of thing, and those are options that are out there. But all in all, you need to understand like when I say investing in real estate, a lot of what I'm talking about is investing in physical properties. A lot of what I'm going to be talking about is, for me, investing in real estate, physical properties. Okay, this could be apartments, this could be condos, this could be single-family residence, this could be multifamily dwellings, things like that. But that's kind of what we're talking about. But I don't want you to think that that's the only type of real estate. There's tons of types of real estate that you can invest in. Okay, now, a couple of key things that I want to just level set on is things like cash flow, right? This is when we talk cash flow with real estate, what we're talking is the amount of money. So you get a mortgage, right, to get this house, unless you pay cash for it, which is awesome. It means you're going to have more cash flow, positive cash flow. But the cash flow is, if you have a positive cash flow, that means you're making money on the property. And that means that all of your expenses that come with that property, meaning your insurances, your mortgage, your your any type of utilities that you have to pay, setting aside money for vacancies, setting aside money for capital expenditure, setting aside money for all of these things, then your rent. So you're taking all that away from your rent, and if you're left with something, you have a positive cash flow, right? That's kind of the goal. So you need to understand cash flow if you're going to get into real estate. You need to, if this is physical properties, you need to understand appreciation of those homes. You need to understand that homes most of the time appreciate, but they could have some depreciation that comes with them, right? These are a couple things you need to think about and consider before jumping into real estate. But just basic right here, just getting started with just understanding some of those real estate and basic terminology that'll help us get through this episode without having to revisit or redefine different words. Okay, so if I say these things now, you can remember. Hey, what did you say? You can rewind and go back and listen. Same goes for future episodes. I'm probably not going to define these terms again. Maybe I do, maybe I don't. Who knows? But if I don't, just go back to this episode and remember what the definition is. So first thing first is we need to set investment goals and assess our personal finances. I talked about this at the end of the Increase Your Net Worth series, but you first need to assess your personal finances. Before you set investment goals here, you want to assess your personal finances. And I say that because before starting to jump into investing in real estate, I would like for you to put 15% into a normal retirement account, 401k, 403b, IRA, things like that. That should be your first place to start before you get into investing in real estate. Okay, so when we go off baby steps, we're looking at this is in the wealth building stage, right? Don't use real estate as this retirement plan. I wouldn't build real estate into my retirement plan. There's so many, better returning assets out there. Holistically returning assets. I'm not saying that your real estate is not pulling in some ridiculous amount of money year over year. I'm not saying that it's not. I'm just saying on average, the stock market is going to return more than your real estate investment. Okay. Just saying on average, annually, year over year. But there are cases out there. There's many cases out there. Let me not even say it's a nuance. It just for the everyday consumer. Set aside your 15% into those market accounts first. Okay. Then we need to, once we get to this wealth building stage, we need to talk short-term and long-term goals in real estate investing. So short-term may be that you want to purchase a property, or maybe you just want to get started investing in like REITs, or you want to invest into some type of like real estate ETF mutual fund type thing. You can. Maybe that's where you start. You want to start by investing in those, right? Which follow some, there's different companies out there that have these things, and they have a portfolio, and you're investing in that portfolio. Maybe that's where you start. Maybe that's short-term growth. I'm going to build up and I'm going to earn a return of this much, and I'm going to use that to cash out and use as a down payment on my first physical property, rental property, right? But you just need to set these goals, and they need to be realistic. You don't need to say, I'm about to go buy a 50-unit condo in Long Beach, California, and go and do that. Like, that's not very realistic. I mean, for most people, that's not that realistic. Not realistic for me, right? But that's kind of where you need to be at. You need to be in a spot where you can set those short-term and long-term investment goals for real estate, because I want you to be successful with this. I don't want this to be a burden, right? There's nothing worse than having this rental property out here that's a burden, okay? So I encourage you to first assess your personal finances as the initial, right? First, make sure that you got your own house in order. You're setting aside money for retirement. You're doing all of these things, and then start looking at investing in real estate, okay? So if you want to dabble in real estate, you need to first create a budget, figure out how much money you are wanting to set aside each month to start to invest. Like I said, it could be in physical properties, rental properties. It could be in REITs. It could be in, different kind of real estate, ETFs, things like that. Up to you on where you get started investing. But if you want to get started investing, that's the first thing that I would do is build up enough capital to do so. Okay. But use your budget to figure out how much you have that you can set aside and then go do that. And then the other thing is if you are in debt, you don't need to be investing in real estate. I'm just telling you, please don't invest in real estate. I've done many episodes about debt. So go back and watch one of my episodes, listen to one of my episodes about debt, and that will help you get some type of guiding light around. Focus on that first. The thing about finance is a lot of people want to do a lot of things all at the same time. If you'll focus on one thing at a time and be really good at that, you will be successful. So we're through that first basic. You've assessed your personal life. You got your personal finances in order. You've set those investment goals. You know what you're trying to go after. Now you're ready. What do you do next? Well, the next thing you need to do is you need to research the real estate market. You need to understand the importance of market research and analysis. You need to understand how to identify trends and indicators in the market. You need to figure out, what does your market look like, right? Like, what does that look like? What is your, average days on market? Like, where's the growing community at in your area? You don't have to invest in your area if you're trying to buy rental properties. If you're trying to buy properties, you don't have commercial properties. You don't have to invest in your area. You can go somewhere else. But what's that next little spot that you do all this analysis, you do all this research, and you're like, here's the next place that's going to boom, right? Nobody knew during COVID that Austin, Texas was going to boom. Nobody knew that Nashville, Tennessee during COVID was going to boom. Nobody knew that Boise, Idaho was going to boom. Nobody knew that all of Florida was going to boom, right? Like, nobody knew these things. But somebody did, right? Somebody did. And the people that knew had probably done research. They probably understood these markets and where things were headed, and they jumped on it. And they probably made a lot of money doing it. But I want to emphasize that location and demographic factors instantly affect your real estate. So if you're going to buy property, location. You've heard it a million times, but you need to start figuring out, where are the significant locations that I think are about to boom, and go and make that an area of investment, right? It's a good place to start. But the first thing you need to do after you got all of your finances in order is you need to research the market. Don't shortchange this. Don't shortchange the market research, because the last thing you want to do is get stuck in a market that's just not appreciating like another market that your second best was. You just didn't do enough research on. Go and research it and figure out what is the next big thing, okay? After that, that's where we talk financing. So let's talk financing options for real estate. It's a few different options here. Probably the most common is conventional bank loans, right? Most people will buy it when you do a conventional bank loan as a investment property. This is not a primary residence. You'll do it as an investment property. Rates are a little higher when you do real estate or conventional loan as an investment property. But that's one option, right? That's one option for you to do it. There's actually two options that I recommend. One is that traditional mortgage, and another is to save up cash and buy investment properties. Now, you're probably like, I couldn't even buy my own house for cash. Why would I buy an investment property for cash? Well, you're right. If you took this from me, and this is not one of my main financial coaching classes that I go over right here. But if you took this from me, I would tell you that you should probably slow the roll, pay off your house first, save up that money, and buy your investment properties in cash. It's like 100% cash flow right there, minus capital expenditures and repairs and, normal routine things. But that's a great cash flow right there to do it that way. But that's one option, right? There are other options out there, conventional bank loans. You can do a peer-to-peer loan. This is where you could potentially go out and look for some type of friend of yours, go out and look for some type of, if you put together a really cool slide deck and show it to some people, that maybe you can pay them a little bit of money to fund you, give you the cash to go buy this house. You could do a like an angel investor type of thing, peer-to-peer loan. You could do a home equity loan. Don't really, recommend a home equity loan, but you could do it, or that's where you take out a loan against the equity that you've built up inside of your home. But there's a couple different options, right? There's a couple different options for you to invest with. The biggest thing that I'm seeing is that people are looking at investment properties sometimes before their main primary residence. And I tell you to slow down. If that's you, if you haven't even bought your own home yet and you're already looking at investment homes, I would tell you to slow down. Just slow down. We are going to talk house hacking. I'm going to do an interview with someone about house hacking. There are benefits to that. There are pros and cons to that. But I would tell you to slow down. If you're not purchased your own primary residence yet, slow down. Okay? Slow down. There's other things like crowdfunding and things like that you're welcome to go look up. But if you are investing in real estate, I would tell you the conventional bank loan, just doing it as an investment property, is the most realistic way to know that you're not getting yourself caught up, right? You're not getting yourself into a bad situation. If you can qualify and you can do a conventional loan as an investment property and qualify and get set up and you're good with the payments and things like that, I would tell you that that's probably your best route. That's hands down, that's probably your best route. So you've got your funding, you're ready to go, right? You're ready to go. The next thing up is you've looked at the markets. Now you need to start looking at individual properties. Okay. You need to start analyzing investment properties. So a couple of things to consider whenever you are purchasing the homes. First off, you need to see, what are people looking for in that area? Is it a 3x2, 3-bed, 2-bath? Is it a 4x2? Is it a 2x2? Like, what is it that you're looking for? That's a couple things you need to look at. Another big thing, location. Remember that. So then another big thing is like, what kind of shopping is it close to? People like to buy near shopping. People like to buy near great school systems, buy in great school systems. But these are all big things that you can look at, okay? These are all big things that you can look at. Now, that's only part of it. That's the location aspect. We haven't even got to the 4 walls yet. So you need to understand that you are potentially going to have some repair values that's going to need to go in there. So you need to add that into the cost of the home. So if the cost of the home is, $100,000 and you offer 105, but it's going to cost you 20,000 to fix it up to make it rentable, that's going to put you at 125,000. So that's kind of where you need to build your setup here so you can see how is this going to work, because you have to do this with every single property. So get used to it now. You need to go through this whole setup every single time. You need to see what is the repair that it's going to take to get this thing rental ready. Because there's another thing called turnkey where things are just already rental ready. They're probably going to cost you a little bit more, but you can just purchase it and then rent it out. The other thing you need to think about is capital expenditures. You need to set aside money for that. That's for things like when the HVAC goes out or a major appliance goes out or something like that you can get those fixed. The other thing that you need to figure out is what is a good fair market value for rent in that area. You need to understand that. You need to calculate a vacancy factor, right? You need to figure out if this is vacant, how, I need to set aside money just in case it's vacant for 3 months out of the year or 2 months out of the year or whatever, right? Like that's saying that someone signs a 1-year lease, they finish it, it takes you 2 months to fill that vacancy. You need to plan for that. You need to plan for property taxes. If you're not going to manage the property yourself, you need to plan for property management fees. You need to do all of this stuff just to figure out if this is a decent home or not. Okay. So my mouth was getting dry. So that's the first thing. The second thing is you need to, you figured out the property, you've analyzed it, you're all good there. Okay. So for me, rental property was practically turnkey, right? You sort of just paid for it and, life was good. And then get a rental, I pay for a property management company, so I don't really deal with it. But that's just for me. Okay. Maybe you want to self-manage, right? You can save that cost and not have to worry about it. So that's just another way to do it, right? Just another way to do it. So you've now got the investment property analyzed. You're good with the investment property. The next step that I want you to focus on is to take action. I want you to take action and get started. Now, real estate is different for so many people. I've got you 3 personas up here, right? Persona 1 is ease is a priority, right? If you want easiness in real estate investing, I will tell you, buy a real estate investment trust, an REIT, a REIT, right? That is the easiest way to invest in real estate. Just buy that, or a real estate ETF, right? Exchange traded fund. So that's the easiest way. If you want ease, investing in real estate is easy. Just invest in one of those. Maybe you're a DIY investor, right? This is where you should buy rental properties, or you should house hack your primary residence. Like you could turn a spare bedroom into a full-on like studio apartment, right? And rent out that room, right? You're a DIY guy. Like you can just throw all that stuff together. Or that, that's called house hacking. Or if you are a DIY investor, you could buy like really, really cheap rundown properties and fix them up. And you are rehabbing properties, and you can go that route and buy really cheap properties, fix them up, rent them out, or sell them. One or the other, right? That's something else you can do. Persona 3 here is a commercial investor. This is where you're going to buy real estate through private REITs or some type of investment platform, right? That's another one. And the last persona is, this is overwhelming. This is too much, and I don't want to do real estate investing. Cool. Never do it. That's fine. There are so many ways to build wealth. Real estate, if it's a headache to you, if you don't love it, don't do it. Really, I'm telling you, don't do it. If you don't love real estate, don't do it. So many people get into it because it quote unquote makes a lot of money. And then all of a sudden they hate it, and they're stuck with the home that is a nightmare and a headache, and they absolutely hate it. So I will tell you that the biggest thing you can do is to don't get into real estate if you don't care about real estate. Okay. That's what I encourage you to do. I encourage you to do that. Now, if you do want to get started, the number one thing that I tell you to do, besides going through the steps we just did, is to that where we talked about investing, analyzing investment properties, where you go through that spreadsheet and you sort of fill out the blanks and to begin to actually analyze investment properties. I would tell you that you should be doing that on like tons of properties. Like go to like Zillow or realtor.com or something, and find a property you're like, oh, I like this property, and this will be kind of nice to run the numbers on. I think that I could do this, and just practice analyzing properties. That's a very perishable skill, but you got to get to the point where you can look at a property. If you do it 100, 200, 300, 400 times, you'll start to get to where you can look at a property and see if it's cash flow positive. You can look at it and say, I could probably get $1,500 for rent there. This is what this costs. This is what this. You just start to memorize those numbers, and you can quickly look at a property. You can be scrolling through Zillow or realtor.com, and you could be like, oh yeah, here's a great cash flow positive property, and not even have filled out that spreadsheet. So that's just, an investor's mindset when you get to that point that you can do that. So I hope that this has been enlightening, right? Because I just want you to get started. I want you to get started. The moment you give up is the moment you let someone else win when it comes to real estate investing. If you really want to get into real estate investing, get started. Start figuring out and learning the market. Start figuring out and learning how to analyze properties. Start figuring out and learning what financing options are you going to go with, right? These are all things that you need to consider before you ever sign any dotted lines on a property. Okay? So figure out what it is. Don't all of a sudden get overcome with analysis paralysis, right? Like you just are so fixated on the numbers that you lose sight of like what you're actually trying to accomplish. But really and truthfully, start getting ahead of the curve and learn how to analyze investment properties. Once you get good at it, you will be good at it, and that'll transfer into allowing you to start really getting to the point where you're about to make a deal. The goal here is if you want to get into rental properties, I'm here to tell you, I'll end with this. I'm going to tell you that people say this. Here's a story that people say, and I'm going to give you the real side. People say, well, you can just hire a property management company and you don't deal with anything. False. That's not true. I can tell you multiple times a year, I have to deal with my property management companies, right? I have to deal with them. That's real life. You don't just get this like wishing fairy tale thing where these magical people handle everything about your tenants, right? It's not real. It doesn't exist. You're not going to just draw a paycheck and do nothing with the property. The property still needs your attention. It does. It's your home. That property management company, they just want you to pay them, and they're going to deal with your tenant. They don't care about your house. That tenant doesn't care about your house. That's your house. So you do have to manage it. You do have to worry about it. If anyone told you that you can just get a property management company and everything is hunky-dory with your home, they are not telling you the truth. They're not telling you the truth. If you think house hacking doesn't come with its own set of problems, because that's something else people are talking about a lot. If you don't think house hacking comes with its own set of problems, you are wildly mistaken. Have you ever thought about living with someone in your home? You don't think that comes with problems? It's not the most beautiful thing. I'm not saying it's terrible. You get to pick who lives there, but I'm just saying that it's not every single thing that it's cracked up to be, what everyone says. So I hope that you have got something out of this. I hope that you can get a better understanding of this. Was not meant to deep dive any one section, but this was really just to get you started around real estate investing. First off, getting you understanding that there's more than just buying a property to investing in real estate. Tons of different ways that you can invest in real estate without ever owning a single property. Okay. But I wanted to talk about that. I wanted to talk about making sure that your personal finances is set up before you ever dive into real estate investing. And that's more than just buying the property. That means any type of real estate investing. I also want to talk about making sure to not skip that market research, because that is crucial to you being successful. Analyzing properties, understanding finance options, and then just challenging you to get started. That's what I wanted to get out of this episode. So if you got that out of it, I hope that you can take that away and go deep dive the areas that you just want to learn a little bit more about and actually get started on real estate investing. It's totally a lot of fun. It can make you a lot of money. It's not passive income. I know everyone says that, but there's nothing passive about it. You are actively involved in these properties, even with a property management company. So thank you for listening. Thank you for tuning in. Don't forget to leave feedback on the episode. If there are any questions that you have, please just drop them in the comments section of the episode. I'd love to read those and respond to you. We also have some other episodes about real estate coming up. This is going to be a series, so just keep tuning in every single week for the newest episode in this real estate investing series. Now, if you are ready to take control of your personal finances and you do want to get started today, I serve as a financial coach, and I've helped many people build their financial plan to get them to where they want to go, whether that be getting out of debt, whether that be building your emergency fund, whether that be paying off your house early, whether that be investing in real estate. There's a conversation that we can have, and we can determine what those next steps are for you. Just head over to thefinancialmirror.org and hit book now and schedule a free consultation. It is free. Only takes about 15 minutes to run through and see if a financial coach is right for you. And then we'll get you started on that plan if it is. If you do want to give an extra dose of support to the stream, head over to thefinancialmirror.org/shop and pick up some awesome Financial Mirror gear. I truly appreciate everyone tuning in today. It has been a pleasure kicking off this series with you. If you are listening to this podcast, go ahead and hit subscribe to the channel and leave a 5-star review and a written comment. If you are on YouTube, subscribe to the channel and leave that written comment. Let me know if you have questions about real estate investing. Let me know if there's ever an episode that you want me to cover. Just pop it down in the questions, pop it down in the comments, and I would love to answer that. Hope you got something out of this, and I look forward to seeing you on the rest of the real estate investing series. Till next week, continue improving the one thing you can control, yourself. Peace.
Well, that wraps up today's Financial Mirror. Join us next week as we continue to work on ourselves, change our mentality, and to commit to achieving the success we always envisioned. Regardless of your platform, help us grow as a community. Please like, subscribe, and share with the people in your lives.